Okay, so welcome to a new episode for the video series Professional versus Retail, right? Where in this series I'm going to show you what is the different approach taken by the pro, right? That is responsible for billions of dollars of profits, right? Now, on the previous video, right? On the previous episodes, I basically told you that the way you are categorizing, right, or the way you are treating the currency pair is wrong, right? You should not categorize it, right, into major, minor, crosses, and exotics, right? And I also mentioned that what is the difference, right, between a peg regime and a free floating regime. Okay, so as I mentioned that you should really focus on the free floating regime, right? Because currency that is free floating, right, currency that have a free floating regime, right, basically will have a higher volatility, right? And higher volatility means higher risk and higher opportunity. Okay, so you should really focus on currencies that are free floating, right? And in this video I'm going to tell you, right, I'm going to show you what is a commodity currencies and why you should care about it. Okay, so before that, right, remember to leave me the feedback below, right? So I can just go through it, and if I find something that is very valuable, right, some feedbacks or some questions that is very valuable, right, then I will specifically shoot a video, right, just to answer it, right? And also leave the feedback, right? Just tell me what you like, what you hate, what you love, what you don't like about my channel and my content. Okay, so also subscribe and hit the bell, right, if you haven't, right? So for those who have subscribed to my channel, thank you for your support, right? And I'm going to keep pushing out different contents, right, that I believe is going to help you, right, in getting and hitting your trading goal. Okay, now a commodity currencies, right? Now when a country, right, when the economics of the country, right, when the imports and exports, right, and the GDP of the country is highly depending, right, on one or two commodities, right, their currency is basically considered as a commodity currencies, right? So for example would be the Australian dollar, right, the New Zealand dollar, right, and the Danish krona, right? This country, these currencies, right, their economy is highly depending on one or two, right, different commodity, right? So this will basically makes their economics, right, their inflationary and deflationary pressures very volatile, right, and basically is going to cause the volatility in the particular currency to be quite high, right, compared to a non-commodity currency, right? So that's why it's important for you to find out, right, and it's important for you to figure out what is the commodity currencies, right? So once you can identify the commodity currencies, right, it basically means that by trading commodity currencies you will have a bigger exposures, right? You will have a bigger you will have a bigger exposures to the volatility, right, which means that you will have a much better opportunity, right, in making money, right, in the forex market, right? Because as you know, forex market is really not that volatile, right, compared to other markets, right, like the stock markets, right? I've made a video, right, just talking about the volatility, right? If you haven't seen that, just click it, right, and go and watch it. Okay, now, so once you identify, right, once you identify which currency is a commodity currencies, right, then you can basically put it into your tradable sets. Okay, so by far right now, right, you should have basically two very basic understanding, right, on the currency categorization, how we categorize the currency pair, right? So the first thing is that you need to figure out, right, whether it is a peg regime, right, or whether it is a free floating regime, right? This is the first thing. And the second thing is that you need to figure out, right, whether it is a commodity currencies or is not a commodity currencies, right? So on the next video, right, I'm gonna tell you, right, how you can combine these two things together, right, to basically optimize and basically find and sort out the best currency that you can trade, right, in terms of volatility, right? So you can find out, right, what is the best currencies, right, that have the highest potential return and also the highest potential risk for you, right? So that when you are trading these currencies, right, you have the best chance of making money, right? And also it will help you to basically filter out, right, a bunch of involatile, right, that currency that did not move that much, right? So something like the euro dollar, right, it doesn't move that much, right? So if you want to trade it, right, make sure you know what you're doing, right? Make sure the economics, right, is really supporting it, right? The fundamental is really supporting your trade on the euro dollar, right? And also make sure that the volatility, right, is worth your time, right? Because I mentioned it a lot of time, right? If you're buying something that's is not moving, right, you're not going to make money. Okay, so on the next episode, right, I'm going to show you, right, how you can basically put this put these two things together, right, and basically filter out what is the tradable sets, right? What is the tradable sets in the forex market, right? And just for comparison's sake, right, just for the comparison purpose, right, the tradable sets, right, in the forex markets will be 300 plus. Okay, so there are 300 plus, right, different currency pairs that you can play with, right? But there are only a few, there are only almost 100, right, to 150, right, different currency pairs that is accessible to the retail guy. Okay, right? So for example, as a retail guy, right, it's very hard for you to take a position, let's say in the Egyptian pound. Okay, it's quite hard for you, right, to take a position in the Egyptian pound, right, unless you go to the exchange counter, right, and you exchange the Egyptian pound, right, with a local currency, right? Unless you do that, right, or else it's very hard for you to take a positions in the Egyptian pound, right? Because not every brokers, right, will provide the currency pair, right, for Egyptian pound, right? So if we sort them out, right, if we figure that out, right, it basically we have around 100 and 150, right, different currency pairs, right, that is accessible, right, to the retail guy, right? And compared to only 150 pairs, right, of currency pairs in the forex markets, right, the stock markets, right, is definitely more opportunity there, right? There are thousands of stocks, right, a few thousands of different stocks, right, that is trading just in US alone. Okay, so the opportunity there is very different, right? That's why professional traders, right, we are basically having a good chunk of our AUM, having a good chunk of our portfolio in the stock markets, right? And then we will have some of it, right, on the forex market, right? Because forex markets, the opportunity there is just too low, right? And the volatility is too low, okay? But as a beginner, right, you should just go and learn about the forex market, right? Because as I mentioned, the forex market, the exchange rate of the currency is basically a mirror for the economics, right, of the country, right? So as a beginner, you need to understand how the macroeconomics, right, affects each other, right, and how the macroeconomics affects the currency rates, right? Because just by understanding the macroeconomics, right, it will give you a very good foundation, right? A very good foundations on future trade idea generations, and also future fundamental analysis, right? So it's very important, okay? So yeah, remember, subscribe and hit the bell, and yeah, remember just to leave me the feedback, right? And just tell me, right, what you like, what you hate, right? And yeah, so yeah, my YouTube channel is growing, right? It's growing fast, right? It's growing fast, right? I did not expect this, okay? And again, thank you for your support, right? It's growing and it's growing fast, right? Compare to other YouTuber, right, that is doing that is in the same niche as me, right, which is in the trading niche, right? So yeah, thank you very much, right? So just leave me your comment, right, and leave me your feedback, right? Because as I mentioned a lot of time, right, my channel, my content is really influenced by your comments, right? So tell me, right, what you want more, right? What is the questions, what is the struggles, right, that you are facing, right, in your trading career, right? Because up to the point, right, like 80% of the content that I put out, right, up to the point is really based on my past experience, right? What is some of the struggles that I have went through, right? And what is some of the things that I wish I know, right, when I first started trading, right, in the forex market, right? So and if I know these things, right, I probably will make more money, right? And I probably will lose less money, right? I will never blow up my account, right, 4 times. And if I know this information, right, so up to the point, right, I'm putting up 80% of the content is really putting up based on my past experience, right, of the struggles, of the success, right, of the sweat and tear, right, that I've been through as a trader, right? So yeah, and also now with your feedbacks coming in, right, your feedbacks you are giving me feedbacks, right, on the contents, right? So the 20% ratio, right, of the feedback type of contents, right, is going to put out more, right? So I mean, I will put out more contents that is basically based on your feedbacks, okay? So it's important for you to just comment below, right? Let me know, and let me know what is your feedback, okay? So I will see you on the next video.